Alrighty, welcome to ACCM. Time is maybe 30 seconds to to 6 o'clock. Welcome. It is 8 o'clock here in Australia, and a big welcome to everybody joining us from wherever you are. So good morning to you, good afternoon, good evening, wherever you are. Welcome. So we are gonna get through, spend about 30 minutes on the markets tonight, and it's supposedly was going to be the non-farm payroll tonight. But as you're probably aware that the U.S. government had been shut down since Wednesday, Australia time. So on the 1st of October, it is the beginning of their financial year. So there's sort of the time when they have to decide on the budget. But unfortunately, the either parties, the Democrats or the Republicans, could reach a deal on the budget. So they had to shut down. So the U.S. government ran out of money. It's a simpler way of saying that. But what does that mean to us, right? What are the implications for the financial markets? That's what we care about. So tonight we'll be looking at not just the U.S. government shutdown. We'll just briefly mention that, and we're going to look at something very interesting. It's just the gold and silver, precious metals. Everybody loves them, right? They've been outperforming almost every asset class since 2023, and silver joined later on and had this massive breakout in 2025. So we'll be looking at them. There are some warning signs. Okay, I'm not saying that they're gonna crash or any immediate impact on the market, but you should know this. All right, we're gonna walk through this, and that's a very important indicator. You can use it now, you can use it tomorrow, you can use it in the future, 20 years down the track. It's still gonna work because it has been working for so long. All right, so welcome. My name is Glenn Yin. I'm the Chief Market Analyst here at ACCM. I've worked for several. Um, I work and I'm how should I put this? I've worked for in this industry for more than 10 years, and I frequently speak to media, financial media like Reuters, Nasdaq, Bloomberg. You can find interviews of me here and there. I'm very chatty. I like to talk a lot about financial markets and anything else in between. So, welcome to those who have just joined. I'm seeing a very healthy number of our attendees joining. That's very good. So, big thank you for spending your time here, and I will try my best to deliver uh, what's worth for your 30 minutes. All right. So let's jump into this. Um, so for those who have just joined, what's going on with the non-farm payroll tonight? It has been delayed. Okay, there's a very big likelihood it's going to be delayed because the U.S. government have been shut down, and a lot of people, government employees, have been put on furloughs. Like, we're going to keep your job, but please don't work. We're not going to pay you. That's what happened. So the people that are in charge of collecting, editing, and releasing the non-farm payroll data in the Bureau of Labor Statistics, they are very likely to have been sent home and saying, please come back again when the government is back up and running. So that's what's happening. So we're very unlikely to have the non-farm payroll data in the future, in the coming weeks after the government resumes its operations. So instead of looking at worrying about non-farm payroll, let's look at the markets, right? So what's very important right now is this prism lens. So what's very important right now is the precious metals, right? So if you have been following precious metals, you will know that gold had gone coconuts, right? It has gone coconuts. Let's jump onto the daily chart, and you'll see I've made lots of notes here. Jumped up 2023 October, right? We all know what happened there. Geopolitical tensions skyrocketed. Terrible things kept happening. So gold prices went from $1,800 or so all the way to 3,800. Okay, 38, 39 now. So more than doubling. Okay, more than doubling. That's huge. And behind this is also the momentum of or market pricing of the geopolitical instability across the globe. So central banks have been buying gold, right? They've been stockpiling gold because people might ask me, Glenn, why are they stockpiling gold? It's just metal, right? Uh, who's going to wear all this shining gold on their heads, on their fingers? Not really. Okay, the answer is not really because central banks will need gold as not as collateral, but it will be used to issue currency. Right? If a bank issues currency without having gold as a backup, that currency can be worthless in a day or two. Okay, so for your currency to be, if you're a country, for your currency to be worthy and to be circulating in the global markets, you must have a lot of gold so that you can issue your currency. All right, so because it's so unstable, right? We know that Russia, Ukraine, the fights going on, and the U.S. just confiscated their assets, the Russian assets. So people are thinking, why should we trust them if we put our gold? A lot of gold are stocked in the United States. So people are thinking if they can do that to Russia, they can probably do it to us too. So we should buy gold to stock in our own country and make sure that our currencies are still valuable and they can be circulating. Okay, so that's one. Apart from the tensions coming from the geopolitical side, there's also the central bank stockpiling, and of course there are the retail investors and going right. Gold is chasing higher. It's going up into this beautiful bull market. We're going to follow suit as well. All right. So that's why we're seeing gold going really, really strong. But gold is, it's a charging bull, right? It's taking the lead. For those that are, they missed out the first bit of this bull run. They can be concerned. They go, should I join right now? Should I buy now? It's already nearly $4,000. It's so high. I'm hesitant to chase up higher. So that's a good concern because it's realistic, and a lot of people have this concern. What we should do though, what we should think though, is from a different perspective. We should think in a way that is there another asset class or a different asset that sort of has shares the momentum from gold, but it's still relatively undervalued. That gives us a better entry point, and that metal is silver. I'm saying this because silver. We've had just this is a side topic. We've had an interview with the CEO and the president of the Silver Institute. He's Michael DiRenzo. He's a very lovely man. He's been in the silver industry for a very, very long time, and he's based in Washington. So we spoke to him, and if you are new to ACCM, please jump on our website. You'll find on the top drop-down menu there is our research department, and there's executive talks series, interview series. You drop down the menu, scroll for a little bit, and you will see our interview with Michael DiRenzo. I think it's from July, so it's quite fresh. The insights are very, very, very good. All right, getting back to the market though, silver, if we zoom out into our daily chart, we'll see that silver, this is before all these notes I made were before we started our international webinars. So back here, look at this ascending triangle breakout, all that, and here as well, daily chart. I remember it was here. All right. So I told our investors that there were good signs that the silver was gonna go higher, right? So going to this ascending triangle, that was back in mid last year. So it was like $26 or so. So forming into this very nice ascending triangle and eventually leading to a breakout has two supports. Okay, two main key reasons. First of all, it's the technical side, of course, technical breakout points you find it here. And the second reason is because silver most of the time follows gold. Okay, so silver lags behind gold. Gold charges first. So imagine that you and your friend, you pick your favorite friend. You guys gonna rob a bank. Your friend is the one that's got a shotgun or a crossbow charging the front. You are the one following. You collect the cash and you carry all the nice stuff. You can carry the loot. So your friend charges front, and you are always gonna follow. All right, you guys are the best buddies. If he gets busted, you get busted too. So he goes forward. He's the guy. He's gold, and you are following. So silver always follows gold I shouldn't say always, but most of the time, silver follows gold. And because silver is a late cycle precious metal. When gold goes up, he follows through. And also because silver has a little bit difference in it. It is what we call a dual metal. Okay, it is it shares the characteristic of uh, safe haven as a precious metal. On the other side, silver is also widely used in many, many industry products. So our phones, our laptops, our cars, especially the EVs, they share so many silver components in it. So that silver has a high correlation to economic activity as well. So very important. But now seeing that silver has gone up from all the way from 26 or so to nearly $50. And the question is, is it still a good time to get into silver? Right? If you missed out on previous webinars, no, back in 2024 when we forecasted this in at $26 or so. Is it still a good time to go in now? It's 40, 47, 48. Will it hit that $50 mark? Now, to answer this question, I must introduce you to a concept. And this, let's get this into the open board. I have a whiteboard to share with you. To get into this, we must, excuse me, I'm getting this over here. Right. All right. I'm going to type it so that when you're watching this recording, I see a gentleman was asking whether there will be a recording. Yes, there will be one, but let me find out where they're going to upload it. I think it's going to be on YouTube. All right. I think it's going to be on YouTube, our official YouTube channel. All right. So we're going to introduce you to a concept called the gold to silver ratio. If you have heard of this, good job. If you haven't, don't worry. Okay. Gold to silver ratio is very simple and straightforward. There's no complex calculations or formulas. It's just very, very straightforward. So let's take an example. Let's say gold price is, let's do this. If gold price is at $3,000 and silver is now trading at $30, then we can come to the conclusion that our gold to silver ratio is what? Is 100. Okay, so 100 is gold to silver ratio. Very simply dividing, where's my laser pointer? I love my laser pointer right here. Okay, so very simple. Using gold price divided by silver price. So gold to silver ratio is 100. Okay. Now, this ratio, when we started forecasting that, you see gold was trading at over 2000, silver was 20 something. So this ratio was well over 100 last year, mid last year. But you go, what Glenn, what does that tell me? 100? What does 100 mean? Okay. So this moves us to the next key point. Historical average of gold to silver ratio. Okay. This will give us a sense of how expensive gold is or how cheap or how undervalued silver is because we have the ratio. Okay. So what are the ratios? Let's have a look at our historical data here. All right, let's have a look at this. This is the 1 year gold and silver ratio. Okay. Now, as we can see, let me get my laser pointer again. Come on, come on, come on here. Okay. As we can see, September 20, sorry, come here. Ooh, why is it not working? Come on, pen. All right, I'm just gonna turn this sideways a bit to draw here. Open board. Okay. All right. As you can see on the top, on the left here, at September 24th, gold and silver ratio, it was about 85. Slowly moving up to April this year, it has reached a peak of 103 points. That is very, very high. Okay. That's a very high level of gold to silver ratio, meaning gold is very much overvalued compared to silver. That means, that means that means silver has a lot of a catch up to do. Okay. April. All right, that's April. Okay, so we jump onto our, if we jump onto our, hang on. So this thing's working on my side. Okay, here. If we jump onto our silver price chart, that was April 2025. Okay, April 2025 is here. Okay, now looking back at our chart, April, May, extremely high. 103 is extremely high. The average is about 70 to 80. All right, the average of across our recent history, it is about 10, 70, 80-ish. That's the average. So being over 100 itself is a big sign that gold is very much overvalued to compared to how undervalued silver is. In other words, either gold is going to come down significantly or silver is going to go up significantly to reach a certain point that brings our gold to silver ratio down to 80, around the 80 range. Now, we said here, right? April, May-ish. Let's look at the chart. April, about here, April and May-ish. That's when the breakout happened. That's when the breakout happened. So the price jumped from $33. That strong resistance was defeated. Our silver went all the way up beautifully to 47. Okay, so that's why the first question is, why is gold and silver ratio so important? Because it tells us how overvalued the gold is compared to how undervalued the silver is. Okay, and two possible outcomes could come out of this. First one, gold could fall back significantly. Right, that's the first possible outcome. The second possible outcome is for silver to go up significantly. Let's put this down on the board. Okay, for when people are watching our replays, just also mentioning that this recording will be posted on ACCM Philippines Facebook page. All right, so follow them please on Facebook. So let's hop onto our whiteboard and write these things down so that we know. Okay, dragging this a little bit further. What does gold? I just say the GS ratio, okay? Tell us. All right. So when the GS ratio is way above long-term average, 70 to 80, okay? Then it means either gold has to come down significantly. Why significantly? Because it is way above the average, yeah? Significantly. It means either gold has to come down significantly or silver has to catch up significantly. Okay, so essentially there are two possibilities. Okay, all right. Another question, a sensible question is, but which case or scenario is more likely, A or B? Does anybody know which one is more likely? All right, even if you know the answer, or if you think that I'm gonna participate in this beautiful webinar in Trump's voice. I'm gonna participate in this beautiful webinar. Please feel free to use that chat box and type me your answer. Probably B is the answer, Vincent. Vincent. So Vincent, you're saying that silver has to catch up significantly. Okay. Wow, wow. I love to see these answers are popping up so quickly. Danny says it's A, so it means either gold has to come down significantly. All right, so Dennis goes, gold is coming down. Charles, thank you. Charles thinks it's A as well. Gold has to come down significantly. Yep. More coming out. K Lux says it's A as well. All right. Gold has to come down significantly. All right, cool. Thank you for sharing. I love to see these really beautiful interactions. So Marilyn says it's A as well. All right. So Vincent, you're outnumbered. Man, I'm sorry you're outnumbered, but everybody's choosing A. Okay? But does it mean A is the right answer? I'm not sure. I'm not sure. Okay? In this case, though, theoretically, let's put it this way. Theoretically, they're both correct, right? Because to put that ratio down, either the denominator or sorry, they have to come down, right? It's either A or B. Right? It's a mathematical question. But in this case, thinking about what I said to you guys a little bit earlier, silver is a late cycle product, a late cycle precious metal. It does a lot of catch up after gold has taken its bull run. Okay, so there is a likelihood let's look at the chart again. Back in here, we saw that silver had a breakout. Silver had a breakout. So silver has the catch up to do because it is a late cycle product, all right? And there's no reason gold is coming down anytime soon. We don't see any significant variables that are going to bring gold down so quickly, all right? So actually, Vincent, you got it right. In this case, in this particular example, B is the correct answer because B shows us that silver has a lot of catch up to do. And thinking that silver is a dual metal, it is a precious metal. It also has a lot of industrial implications, right? So when businesses are buying silver, let me get the board up again. So when businesses are buying silver, it drives up silver prices. Okay. And another thing that you can see from our interview with Michael, the president of Silver Institute, is that silver supply had been really, should I say, really undersupplied for the past several years because there are several reasons, several factors driving silver prices. All right. First one, EVs. Okay. Electric vehicles, they use a lot of silver, right, in the batteries, in their electric components. Second one is the semis or the semiconductors, right? AI is everywhere. Everybody's using AI. The public toilet I used yesterday, it has AI in it. It opens and shuts that door, and it opened the door while I was still inside it using it. Okay, so good or not, it uses AI. It's got a silver in it, right? It's got a chip. It's got something that decides, well, Glenn's done using the toilet. Wow, open up. And all the ladies just scream out there. They're just watching. They wanted to come in and use it too. So they use silver in the semiconductors, in the chips. Okay. Last reason is that undersupply. Right. So several factors driving silver prices. Okay. Now, after spending about 20 minutes on this, Glenn, are you crazy? You have 10 minutes to wrap up this webinar, and we haven't got much valuable information out of it. I hope you don't think so. I hope you think that everything I've said so far are very, very good. You come back again. All right, before I move on, Alcaraz says, is it true that there is a physical shortage of silver versus what is being traded? Um, that very good question, Ocarez. I think it depends on how you frame what is being traded. The first part of the question, is it true that there's a physical a shortage of silver? I think that is true. That is in our interview with Michael DiRenzo. I'll get just hop on our YouTube channel. Okay, YouTube channel. Go on YouTube and go to AC Capital Market, and you will see the videos and find Michael DiRenzo. He talked about this a lot in detail. And there's another gentleman. His name's David Morgan. He worked in Wall Street for a long time, and he's the silver guru. Okay, he's written books and he's been on CNBC and everywhere. He knows a lot about silver. He talked about silver shortage as well. So jump on the videos and then find out the exact answers. I think they are more credible than me. I'm a generalist. All right, cool. Let's move on. So the question now is for us for this webinar is what's going to happen to silver? Are we gonna just are we gonna be able to uh, buy silver now, or are we gonna just sit it out or find another asset to look at? I think the answer is is probably not what you would expect it, right? I think people would say that Glenn, you've spent 24 minutes talking about silver, and you're gonna say that silver is a long chance for silver. But I actually think that time, that window has sort of lapsed, or it's on the verge of doing so. Because let's look at the gold to silver ratio, the 1 year chart. This is the one we just looked at, okay? So after peaking out here at 103, April, May this year, it has retreated a lot. It has the temperature has dropped a lot back to 85. Right. And 85, how high or how low is 85? The answer in this is here by looking at the long-term average. This is a 2 year chart. Okay. So you see that June 24th, it last year, right? June last year, it was at 75. That's very reasonable. Okay, very reasonable price range. And just by looking at 2 year chart, you see that the top here, the average, I would say the average. If you have if we put in the Bollinger Band here, okay, Bollinger Bands are not to be used this way, but if you put in the Bollinger Band, you'll see that 1992 is probably the reasonable upper band, and 80 or 78 is the lower band. That's a 2 year chart, and then we jump into the 5 year chart. And you will see that long-term average, wow, 2020 it was at 65. That was low. That's very low. But 2020, also given that it's when the pandemic broke out. Silver was the industrial metal. We talked about that. Production, factories shut, so that was low, reasonable. But look at that long-term average. It's about that, 75, 80-ish. Then finally, let's look at the 10-year chart. All right, 10 year chart, and you will see, wow, okay, well, 60 something, then we reached that 60 something in 2015. So the long term average truly is around 80. Okay, truly is around 80. And right now, it's about 82, 83, 84. It's very close to the long term average. And given that silver has jumped up so much, okay, so this is looking from the perspective of gold to silver ratio. Looking at silver prices in terms of technicals, we'll also see that in 1978, right? This is way before most of us were born, and in 2012-ish, and right now, there is a range of strong resistance. Okay, 48 to 50 range. This is very strong resistance. So, I mean, given these two pieces of evidence here, I think it's worth being a little bit more cautious on silver. I'm not talking about gold yet. If gold goes crazy, right? Gold goes up to 4,200 in the following 2 weeks. Something goes terribly wrong when the U.S. government was shut down. Gold rushes up, silver stays here. Then yes, silver could become more likely to follow through. But right now, given the current gold and silver prices, we should be more cautious on silver at this moment. All right. Okay. Then the next thing I want to talk about, apart from silver, is that the government shutdown itself. Okay, I've got a chart from Statistica. This shows the length or the number of days of U.S. government shutdown since 1976. And apparently, the longest shutting streak, or the shutting streak, is here in 1819, 2018, 19. It's 35 days. And the implication for this, if you are new to trading, you might be a little bit worried that when the government shuts down, what's going to happen, right? What's going to happen when the business shuts down? When you go to supermarket, they shut down. They'll probably sell the vegetables pretty cheaply to you. Is it going to be the same with the financial markets? Is the S&P 500 going to crash? The answer is, let's have a look at the chart. The answer is here. All right, this is S&P 500 performance during U.S. government shutdowns since 76. Okay, so same time frame. You'll see that the returns are sometimes negative, sometimes positive, depending on who's president doesn't matter. Senate, House doesn't matter. Okay, the thing is, it fluctuates, and there's no definitive answer to the government shutdown. Neither is a correlation to the between the number of days shut down and actual returns we see. There's no such correlation here, at least very weak. If you have to run a regression analysis, open up your Excel, throw in the numbers, and I'm more than happy to hear your answers next time. But we see that the average return over this about what 60 about 55 years period 50 sorry 50 years is a negative 0.6% return, so it is very very minimal. And the percentage 44.4% of the time it's a positive return, so basically 50 and 50. Nothing much happens in when the government shuts down. Okay, so don't be very overly concerned with the government shutdown. There's one thing, though, however, that is the valuation level of the U.S. equities. Now, if you look at S&P 500, God knows how many all-time highs it has scored, right? All the way up. I mean, just look at 2023. It was at 4,800 points. Now nearly 7,000 points. So a lot of valuation, frothy valuation. I'd say frothy. Doesn't mean it's going to crash. It's definitely not saying that go ahead and short it right now. Shorting has unlimited risk because it can go up indefinitely in theory. Okay. So shorting is not the best thing to do. But bear in mind that if an opportunity occurs during the shutdown, something goes terribly wrong, a black swan event, and US equities start dropping, 10% correction or 20% bear market, these are good opportunities to keep your eyes on. Okay, so the valuation is really high now. Should I go in and long it? Unlikely. Okay, I personally wouldn't do it unless you're a really short-term trader, scalping strategies, or looking at the daily and minute candles. That's fine. That's fine. If you got your strategy, it's fine. But if you're going for a medium or long term, going long right now, I would be very, very, very cautious. Okay, so that's the S&P 500 and US equity. Same with Nasdaq, 'cause they share most of their tech components. But I want to spend the rest of the time. Oh, we've gone over the time limit, but that's okay. I love to see this really active cohort and really lovely people. Thank you for coming, by the way. So when we look at the US dollar, right? DXY is US dollar versus a basket of six currencies. Uh, it's very very good. I've actually been following this since here. Okay, so this is the hourly chart. You see that's coming down, right? For the since August, just 2 months or so ago, it's been on this descending trend line. So what I want to do, what I like to do as a trader is that I believe trend trading is the best, regardless of your skill levels. It is simple, straightforward, and you have a handful of trading strategies and indicators to use. So going down from here, some really important resistance levels. 98, 98.423. Okay, 423 or 4230 if you have the fourth decimal point. So 98, 4230 is very important here. So first of all, it comes down, right? It went down here, and you have multiple contact points here, all failed attempts to bring it back up the 98, 4230 level on the technical side. Keeps coming down. And the most recent rebound um, also failed to touch 83, 4230. Also, on the fundamental side, the Federal Reserve is more than likely to cut two more times. First time, end of this month. The second one, December. So two more cuts. All right. The dollar strength is negatively correlated. Okay. Or should I say that when the rates are reduced, the dollars are going to follow that pressure downward as well. So on the fundamental side, dollar is going down as well. So if you're a trader of US dollars, you should, once you see an opportunity using technical indicators or whatsoever, you should have a bias of shorting the dollar. Stay on the shorter side of the dollar, okay? Rather than finding a rebound here. Say, I'm gonna come in and save the dollar, very risky. Instead of thinking that way, you probably you'll be more better off when you go find a shorting the opportunity to short it when after rebound. All right, so that's the dollar. The same goes for euro, goes for the pound. Now the pound and euro, they're both in sort of this Darvas box patterns, but the pound is very much in it, and we can in the short term use the one 33.23 as a resistance level. And if there's a breakout or breakdown, you'll know it. Okay. I really do want to share with you the another beautiful short to medium term trading strategy using the standard deviation and the Bollinger Band. But we're out of time. We're out of time. I have another webinar to go very soon, so I must end it very soon, right? But just to wrap up this webinar, we've talked about gold and silver ratio. If you want to rewatch it, please hop on our YouTube channel, and you will also be able to find this on ACCM Philippines Facebook page as well. All right. And please do drop comments if you haven't had the time, if you are taking a shower right now and listening and you sort of go, oh, I don't have my fingers are soaked in bubbles, I can't type anything. But when you do the rewatching on YouTube or the Facebook page, please feel free to drop your comments. Give me some feedback. I want to hear short-term strategies, Glenn. I want to know the fundamentals. I want to know, tell me anything. You can even tell me, Glenn, I want to know how to read a financial report from the listed companies. We can jump in those. What's a regression analysis? How to use Excel and draw the charts and predict or forecast stock prices. We can walk through all of those. All right. So please drop that. And thank you so much again for coming. I see a lot of people here, nearly 100 at some point. So it's really beautiful. And I look forward to see you again. And hopefully, the NFP gets released once the government resumes operation and we can see each other again. So thank you again. Have a good night. Happy trading and good luck. See you next time.